Hello, good morning. Welcome to another Yes Fit Australia stream. Today is Thursday, April 13th. It is 8:50 a.m. Okay. Let's check before to understand this time today. I'm going to review the market first. Not what's happening now, but the homework that I did that we are supposed to do every single day. Alright, we have this monthly bar, this monthly chart where it is very, this market is being sold from the 4140. We have an upside breakout from the previous month that is being rejected. It is too early yet in the month to say that this is a rejection. Okay, not too early in the month, but too early after this is happening. Okay, we have this bar previous month range which did not have excess at the upper side. The destination of this breakout trade failure is the opposite side of this range. It didn't reach it. Opposite side of this range, in this was a 3-month range breakout, was the destination was this low. Okay, now we have excess, but the market is higher than around that level. Well, I call this decision making level, or go. Jim calls this a go no go level. All right. The breakout failure target 38.40. What I say that 38.40? That's the low. Failing targets this low. Oh, down here. Okay, but the market is still in this decision. It's still at this level. It has been sold multiple times. Everybody, if I can see this, everybody can see it. Okay, that's for sure. Now, the weekly has a little bit more information here. We got this big this support, which is the 4082. Is the support? Why I call it support? Because it's the breakout level in the weekly. We have this range 1, 2, 3, 4, 5 week range here, and it has a breakout to the upside, and hasn't been tested yet. And these 2 weeks, last week and the current week, that it's almost coming to an end. We got one more day. It has a very narrow range, and this one also has a very narrow range. Narrow ranges are very easily to be toppled. Okay, it is not the same. For example, if this week was same size as this one, right? It can go to the it is harder to go to the upper side or to the lower side this week. It is easy here. You can very well take this low out and then come back to take this high. That's what I'm trying to say. Okay, it can happen very fast as well. The low this week has not been taken yet, so technically we still are trading to the upside in the week. You got 1, 2, 3, 4, 5 weeks going to the upside. The trend to the upside remains intact. It's still there. The market is still going to the upside. Okay, so if you are thinking to go short, think about this. Right? This is just information that the market is having here. The trend to the downside that previous month started, this month ended that. Okay, so the odds are that we are going to trade in range here in the monthly, but the monthly is a bigger time frame, right? The next reference, the immediate reference in this weekly in the upper side is these highs. These two highs are very close, which is in the market profile are these two. They're very close to each other. And after that, we got the 4200, which is a round number. And actually, I'm looking to the gap, the only gap that can be seen in the weekly. I believe this is 4208.5, the low, and the high is 4020. Those kind of like round numbers there. But they have a message here. Okay, I was just not to myself what happened with support. Okay, but to for the market to take this level, this would mean the end of the upside trend. So no more trend to the upside. So now markets rarely go from bull to bear, from buying to selling right away. Usually there's a range in between those. Now, the daily here is becoming interesting here because we got this, the structure right away. The structure of the market is weak here. Why I say it's weak? First, I got this low that's coming from the from the 200. All of this rally, all this upside movement has a base on the 200, which is also very close to this low here. The next low was bought from the 100 moving average. The next one exactly from the 50. Then we got exactly from the high of this one. Then exactly from the high of this one. Very technical trading here. And now the market is forming a range here. We got 3, 6, 7, 8 days range, which is starting to resemble a shape of a P. P shapes are characteristics of short covering. Short covering weakens the market. If this range has no upside extension, okay, if this range doesn't have any kind of extension to the upside and keeps trading in range, it will be more and more likely to be short covered here, because I got the stem of the P here. Can you see there is no coming back, no back filling here. Higher, and just sideways trading here. The upper side shows that there is no excess in the upper side as well here. No excess here. Very weak low here, the 4100 here. I got a 41 level here. I got the center of the previous trading range. This is a 12, 13 trading range, which is basically the center of this range as well. This level here is this one actually. And notice how the overnight was sold from that level. And it is just, markets are irrational, but are irrational in a predictable way. That's a quote. I'm quoting Nicholas Taleb here. Okay, so the overall picture is there's a weakness on both sides, but there is more weakness in the lower side. I mean, there's more risk, right? It is more risk to be long in this market than it is to be short. Significantly more risk. The structure of the market is very weak. Now, another thing here. This market was going to the upside 1, 2, 3 days in a row, and this is a strong outside bar. It opened in the upper side, explored the upper side of this range. Small range, narrow ranges are easy to be toppled, and close it below. So there's change here. There's something has changed here. This was an outside bar to the upside. This failed to be a downside, an outside buy to the downside, and after 7 days, we got an outside buy to the downside. Only one. Okay. Now, this could be relevant. This information here could be relevant. We have an outside day to the downside. Okay. Now, market profile. I'm zooming in the market. We have these highs that are kind of close, relatively close. There's excess here, but there's no significant excess here, not that much. Notice how the high was made in the overnight, like right here. Yesterday, this high was down here, from 1, 2, 3, 4, 5 days back. Now, it is a little bit higher. Yesterday, we made a high in the overnight, in the Globex. It's not usual. It's not usual that the markets use that high as a relevant high before any significant break or any significant movement to the downside. It's not unusual that the market comes back to recheck that before a break. Now, we were talking about how big this level is in the daily, the 4100. I got the 4100 here. Got the 4100. Let me open it in the browser. I guess I can make it bigger in browser. Can I? Yeah, okay. This is 4100. Notice the lack of excess here. There's no excess. No excess means that the action to the downside has not been completed yet. And there's another low that has no excess here. The action has not been completed here. It was bought from the 4100, very mechanical low, so it is poor and it is weak as well. Another one is right there, just a couple hundreds from this low. This is the weak level that we were talking about in the daily. Notice how exactly comes from. I mean, this is one tick from closing the gap. This one also did not close the gap. This is just there, but and another non-excess low down here. So, in the intraday has very low, very weak levels, right? We have a pullback low here, a weak level here, another. This is the breakout level, intraday weak level, overnight not revisit prominence overnight POC here. Overnight low coming from POC. Daily hardback. Yesterday repaired most of the weak references from this day, but has left the main one there. Now, most of them has been repaired. It's only one left there. So it's not as weak as it was yesterday. I'm talking about just this day, not the whole structure. Okay. We can see the 8-day range here, the outside bar here. Even though this is an outside bar, here, value is overlapping, just overlapping. Most of the action yesterday happened in the upper side. We were talking about how hard it was for the market to move value lower. The market will need to have significant break to the downside to move the value lower here. And the market has a significant break, but something that catches my attention here, that's very, very, I'm very aware of this level, is this level. Notice how we have 1, 2, 3 periods that were sold exactly from the same level up here, right there, to the tick. It tells me this moment to the downside the trading that happened here is very weak. The trade to the downside that happened here is very weak. We were talking about yesterday, remember, in the overnight when we have the spike to the outside, the spike was very weak because the base was exactly at last. The same thing happens now, but in the opposite direction. Within the regular trading hours, it's happening coming from this level. Okay. Now, another thing, we talk about this high making the close. We got PPI at 8:30 a.m. We have a reaction with this. We have a reaction. We have a spike to the upside. Again, the spike being just mechanical trading here, very short-term trading here. Look at where this spike is coming from. Look at the base of this spike. Seller, right? The spike is not as big. It has the chance to take this one. We didn't. Trade is happy linear now, right? Okay, I'm not going to go that far because they were, longs were crushed yesterday. Even though now they have better odds going to the upside, they are more careful now. Look at this. Look at what happened yesterday here. There's a lot of inventory here, but no, they are measuring their steps now. They are being very careful. The same kind of traders coming from the seller, coming from this high, which is the heart of the range, just very, very, very exactly. It's telling me who is doing the trade. And remember, when we talk about the stage of trading, what the stage one trade can be. If we got this trade, for example, or this trade, I wouldn't never go. I mean, I was looking to the upside yesterday. Okay, I was looking to the upside. I was looking at this overnight high, the potential to go to the upside. When the market days make this level, okay, the odds that this high was going to be taken were incredibly high. The risk of being short was very high to be short. But guess what? The market didn't care. The market, instead of breaking above this high, it actually break below the low, below the daily low. Ending one time frame in lower, ending the trend, the downside trend early in the morning increases the odds of rotation. We had rotation yesterday. They come down, come to the outside, next thing to the downside. When we have rotational days, the odds of having long developments, I mean, we have more odds to have more trades, but these trades are short, not going short, but short wins, right? The goals, the objectives, the destinations are very, very, very short. Okay, I could see only one trade yesterday that I didn't take this trade because I thought was too risky. It didn't break when the market was. How it happened. We got this news that I guess was the ECB, the European Central Bank president, was telling that there were going to be more hikes in the horizon. Same with after the FOMC. Something happened after the FOMC release. At 2:07 we got some kind of news and boom, the market just made this movement. And when it was happening, there's no way I was going to be in this trade. But somewhere down here, I said, no, this market this one is not going to be taken. This market is not going to take this high. It rather will take the low. Now, it took the low. There could be the potential of trade here. The market stops here. Retrace it right here. But as I say, there are more possibilities of more trades, but the development of the trade is not longer distances. It's very short very short trades. Right? It happened, took yesterday's low out, join, it merged the lower distributions, and that was it. I was also checking yesterday that when that happened, we have, oh, I cannot see it here. We have significant amount of volume coming to the market, coming here. And when this happens, this for me is the end of the end to the movement, or to the downside movement is close. It's getting too close. It has significant volume here, kind of more scattered volume here, and it ended there. There's going to be times that this is going to continue, keep going to the lower side. Maybe double, triple the distance here, but those events are not common. It happens, but but every time that I don't close, that you don't close here, and the market comes back and takes your profits, or even puts you underwater, for every 10 there's going to be one that's going to be to the downside. This is not worth, to try to chase the whole thing. I just see some, the movement getting old. And what I was telling here, you have this trade, taking this one here. Remember, always try to remember which stage of the trade I am. This could be some innovators here, which I don't think so. I didn't think there was big money here. I don't think there was. You have innovators, early adapters, early majority, late majority here, and laggards. Here, coming exactly from half back of this period. Right. So what were the odds of this trade keep going lower? Keep going this way. There were relatively low odds there. Okay. I would have never taken this trade. Never did nothing here to the downside. The risk was very high. I could have missed also a really big movement to the downside, but so what, right? Now, let's talk about what's happening in the overnight. Before doing that, okay, this level, if the market opens somewhere up here, this weak high will be repaired. Would have been repaired. This is a weak high. Alright, let's take screenshot of this one for my homework. Now, what does it note? What should I note here? Okay, overnight inventory is again. It's not 100% long. It's long. It's long. It's mostly long here. It's mostly long. Counter option to overnight inventory would be break. Okay. I'm focusing on this high now. We have a non-excess. The low is weak. The non-excess, the action to the downside has not been completed yet. There are good odds that the market is going to take this low. But which thing is going to be, what thing the market will do first? Counter action to overnight inventory, completing the action to the downside, repairing the weak, the exponentially weak high here. Which one is going to be done first? I don't know. I don't know that. I don't think nobody knows that. And that's the thing here in trading. Right? What I do here, this is part of my homework. Okay? I do this to try to keep myself focused in what the market is doing. I don't try to guess what the market is going to do. Okay, the market can rally and take this high. The market can break and take this low and towards the 4100, make a new weekly low. The market can rally, have a big rally to take this, to make a new high. Any of those things can happen. When I do my homework, what I do is I kind of open my mind to see all the potential scenarios that are happening. What is the structure of the market? Is the market increasing volume? Is the market going to the downside? It has conviction. The volume is accompanying. It's accompanying the movement. What's going on? Where the pressure is. We see yesterday as it changed, the pressure is to the downside. Okay, but the way how he's doing it also plays a lot. And it could be, for new traders, it could be very frustrating. Even for all traders that are looking for answer, that are looking for somebody that tells them, the market is going to do this, that this is a breakout, that this is going to happen, and this and that. It can be very frustrating because there is not an answer. If there was an answer to any of those questions, nobody will lose money here. Everybody will be making a lot of money. And when everybody makes a lot of money, nobody makes money. Can you see what's happening here? How counterintuitive this is. The fact that too many people expect something to happen actually give us the opportunity to do something. You can apply, and this is part of market understanding. And the reason why I don't call trades is because we need to come out with a strategy. Because the thing that we do, the thing that we build, will be based in what we are. We all are different. We have different. We were raised in different ways. We have different mindsets. We have different goals. Some people is 100 dedicated to this market to be a trader. Some people is struggling in the market. Some people is very successful in the market. Some people has 2 jobs. Some people has 3 jobs. Some people has a lot of sleeping. Some people has a lot of trouble. There's a lot of things that are different between us. And what I try to do, if this can help to somebody, is have an understanding of the market, of how markets work, what are the dynamics of the market, and use that along with the self-understanding, all that information to build a strategy. For example, something that I learned, I used to trade breakouts. I would say, this is a breakout. The market has took this high. But there is actually the only breakout here, the only breakout trade that can happen here today is this high here. Why? Because this is a range. I have 1, 2, 3, 4, 5, 6, 7, 8 range. And I used to think of myself as I trade breakouts. But I was doing a lot of things inside here. And that is because I had no idea of market dynamics. I didn't have an understanding of markets, and you can imagine the results. The results were just catastrophic. They were not there, and it takes time. It takes time to have an appreciation of the market, to be in sync with the market, and the idea that good traders, the successful traders, win a lot and win all the time. That's also wrong. You lose. Successful traders lose a lot of times, but they don't lose much. They're not attached. They have a strategy and stick to their strategy. That would be, for example, taking this high. Okay, this is a breakout. I go long. But if the market doesn't take this one, if the market comes back below this, so that's my out. I'm out. So my trade has failed. I missed a trade. I lost here. I get my losses. I'm out. I don't wait the market to come back all the way down to here. Okay, it's not working. That's how they think. Yesterday, okay, we have a big spike to the upside. Okay, big spike to the side. Took the overnight high, make a new overnight high, make a Globex high. We got an outstanding bar spike, and notice how this bar was at the center, pretty much at the center of the previous bar. A very narrow bar. This is a trade here. This is a breakout. Whatever the breakout of this bar is, that's the direction of the trade. How do you know your trade fails? If the market, if for example, if we're going to the upside, it takes this low out, then you're out. That's my stop. For example, that's an example only. And yesterday we got a situation. We got a big spike. Break out of this range. Inside bar. Okay, I'm going to go with the breakout. The expected direction was to the upside. We got an overnight high, high making the overnight breakout here, but the market didn't. Which direction was this break? This break was to the downside. What else do we have here? There was no breakout. What could happen didn't happen. And sometimes what doesn't happen is as important as what happened. Okay, when the market didn't take this high out, so that was a short here. All right, that was a pretty quick short, which was the destination. Also, where could have this market go? We got extremely long inventory, overnight inventory, very wide overnight POC, non-excess in the low. At the center, at the center of this range from here to here, you almost have March high, previous month high. So that was it, coming all the way down to here, and that's it. That's the risk, Down here, the risk increases. It is easier now to see, when you look back, because I got this highs since this day I put this level here. Don't pay attention to these numbers. Just look at this. So there was something here. I was thinking, okay, all right, narrow ranges are easy to be toppled. So what are the odds the market can take this range out? Are good odds, right? The market got good odds here. So when the selling is coming, when the market came up to hit, God man, I thought this range was contracting here. No man, the potential. I was still looking to the upside, and there's a lot of selling that came up here, right here, and market has this rally. I started to wonder. Okay, I was still looking to the upside, but I started to wonder when the selling is coming here. When the selling is coming here. So it gives if I have a bias, having a market understanding, a little bit of market understanding helps, you know, to put a to put a break to that bias, kind of like to break the illusion, right? Because when you have a bias, you cannot see nothing else. You're focused on one thing and that's it. And when you are hyper focused on one thing, you cannot see what the market is doing. You are convinced that the market is going to do something, and you lose your focus. Actually, you are not focusing on the market, you are focusing on something else. You want the market to do something. Everybody wants the market to do something. Everybody, every participant in the market wants it. The market doesn't care. The market doesn't know. The market is not something that's going to come towards you and do what you want. It is us we need to adapt to the market. It's not the other way around. So that's what I try to do here. So that's the way how I try to see the markets. You know, if it helps, it helps me to do the stream. Actually, that's why I do the stream. I have people here that offers constantly. They are offering followers or whatever. I don't know what things like that. But that's not my goal. Okay? I use this stream to focus. It is proven to me that it helps me with my focus, and if it can be of help to somebody else out there, okay, good. Right? I'm glad it is help. Now we got only 2 more minutes. I didn't talk about the spike. We have an upside. We have a spike to the upside. Okay, spike to the upside. The market is opening inside the spike. The same kind of thing that happened yesterday. We have an upside spike, opening inside the spike. The market is in the upper side of the spike. It's not at the center of the spike. On the upper side, we have this weak low here. The action has not been completed to the downside. So which direction is going to be? Again, I don't know the answer. I don't think nobody knows that. Nobody knows the answer. Okay, opening up here, this level is corrected. Okay, the weakness here has been corrected. This would be the only one that remains. The market is now focused in the odds of having a recession. Now, give me a second, please. Inflation seems to be not under control, but the odds that gets out of control are lower now, and the market is focusing more in the odds that we're going to have a recession. Now look at what's happening with God. Look at what's happening with gold. Again, there's a huge break to the upside. Huge opening to the upside here. You know? There will be a time that this is going to be the opposite. Okay, this is a new high, the market. God damn it. I sold my gold when the market was down here. But just a couple ounces. Whatever. Alright. Alright, market is open. It's opening right from this level here. Opening is okay. Look at where it's opening also. Body very low. Opening inside previous day range increases the odds of chopping. Chopping is very costly, very expensive. This high has been repaired. I got this one which is I'm going to highlight this 3 white, 3 white. It's exponentially high, exponentially weak. This size is exponentially weak. Remember, the overnight inventory is long, right? Overnight inventory is long. Counter-action will be a break. Is the market going to have a break here? That the thing about these overnight counter-actions is that it could be misleading. Traders may mislead that for a more potent combination of selling, when actually it is just a counter-action to overnight inventory. Okay, market is not doing nothing regarding the overnight inventory, at least so far. It's just impressive. It is impressive. I mean, I wouldn't use the center of the range as a reference. I would give it more weight to the lower value area here. This is not a good level. I mean, it's selling from here. I don't use this for trade, but I use this to see who is doing the trade. Very short-term trade, very short-term trading here going on. I'm a little bit cold. Let me grab a jacket. You have to have patience when trading. Tell people could see this, the weakness. Okay, this market is weak. The selling was weak. I'm going to buy, and they just don't wait. And the market will give you an opportunity. Market will give you an opportunity. But we have to be patient. We need to have patience here. When something that I've noticed, for example, is that this is happening lately. As soon as the market closes, I start. I watch. I start to get distracted. I start watching YouTube again. That's something I need to do some adjustments there. I need to see what else I can do. Yesterday was like that. What happened yesterday actually, I was, when I see when this movement after this break and we have this rally. God damn it! I said, what am I going to do now? So I started watching movies yesterday. Why I have this in one screen and I'm watching, and I don't remember what movie I was watching. Okay. Opening inside previous range increases the odds of chop. We have news events today. Not too much happened. We have a 8-day range. 1, 2, 3, 4, 5, 6, 7, 8. The market has gone nowhere in the last 8 days. We are all the markets opening inside, almost at the center of the range, but nothing's happening. What is next here? We have this thing. Traders have begun to focus on recession. That's the new shiny things. Okay, it was inflation until just not long ago. Now recession fears. That's what's dominating the news now. The news cycle. Recession here, recession over there. Okay. The damage that these Fed policies could have made to the economy is what is on site now. Yesterday, when we have this break also, this was when I don't know who said, but some Fed board member said that the odds. I guess what he said, there was going to be a recession, a mild recession. That's what he said. And then as soon as that happened, boom, got a break. News based. Alright, we're having a contraction here to overlap. Next thing on the low side, half back. POC, settle, last, yesterday's low, overnight low. Oh, look at this overnight low. Look at what it was about. This day's POC. I know that's expected. Let the market settle. I will let the market settle here. Alright, is the market going to take this low first, or is the market going to repel this high? Which one is going to be? If you have any questions, any comments, please just let me know. I would love to have any kind of discussion here. And you have to be also. I am willing. I will be very. I am open to any kind of conversations, even to the things that have not been pleasant to me. This is the high. Notice this high here. This high here. Notice the volume that has on the upper side. A lot of volume here. A lot of volume from this high. This break couldn't take this. I mean, it closed the distributions from this day, but it couldn't get to this fat part of the profile. There was nothing here. There's nothing here. There's nothing here that could have offered any kind of resistance to the downside movement here. It's just there's just not selling. There was no selling here. The market was just. I mean, this downside movement took care of these longs here. This longs not out. This market removed. Well, more longs came here. These ones took these longs out. Okay, that's how markets. Now that's the dynamic. If we see market, when we start seeing markets as or at least short-term trading, which is what I do here, very short-term trading. Short-term trading has a lot to do with market inventory getting too long or getting too close, and the rebalancing of these inventories. That's it. Has a lot to do to that. When you start seeing the markets in that way, instead of just chasing price, it will change your perspective. It will change your perspective. You will have a better appreciation of the market, and if you start to build your market profiles, if you don't have market software, even if you have a market software, it is going to be very helpful as well. do have my, so once again, I do have, I do build my market profile by hand every single day. Sometimes during the day, sometimes I don't, but most of the time I try to do it. You know, this is how I calculate value area. You know, sometimes I calculate my value areas. I got here, for example, from here. This is from this day. I got the POC, hardback, and compare with with this software. It helps. It really helps. It really do. Alright, opening inside previously range, advertised shop. Shop is being delivered. Shop is just a market that goes to the upside, downside, upside, goes back up, goes back down. But that is not a clear movement on the downside. Compare this day, what's happening now. I hope you can remember what happened yesterday. Okay, yesterday the market opened outside out of balance. The market breaks out of balance. We have a balance here, right? This day it's outside, open outside. There's opportunities here. When the market comes back inside previous day range, I automatically see the opposite side of the range. It came back. This day come back 5 times into this day's range. It didn't go to the the opposite side that day, right? But it's signal, this day's signal the weakness of this movement, or this upside movement. It contradicts, okay, this day here has a lot of liquidation here. There was a lot of longs that were coming from these days, 1, 2, 3, 4 days. A lot of long inventory here. A lot of liquidation happened here, rebalancing of inventory, of long inventory. And when we have this contradicting information here, is one thing pointing to the upside, another thing pointing to the downside. So what do I do, man? I got so many things going on at the same time in different directions. And what could be happening is that we are watching different time frames there. We are watching the information that the short-term time frame is doing, pointing in one direction, and another, the information that goes in the opposite direction is another time frame trading that is going on. Okay, but it's different time frame. When we are aware of those things, we could learn also to manage those contradicting information. One time frame is doing one thing, another time frame is doing another thing. Okay, how come it's possible? God damn, how that's possible? What the heck are you talking about? We have seen that. We have seen that here, for example, right? Longer time frame is selling from this level. Medium time frame is buying. You can see it's buying. Market is going to the upside in the medium time frame. Short time frame is doing nothing. It's just back and forth, still in a range. Can you see three different time frames doing 3 different things? When these 3 time frames line up, it doesn't happen often But when it happens, that's a good opportunity. All right. We may have, for example, we may have. I'm going to make up something. Make up something. Let's say, well, break out of this level. Okay. We also this also happens to be a breakout on the weekly. When we have 1, 2, 3. Actually, it happened. It happened here. 4080. March 4080. What happened here? Let me see. I remember this day. I'm trying to remember that. There was the overlap of the weekly and the daily when this happens here. Just 2 time frames, and we have a really high movement, upside movement. When the 3 time frames coincide, overlap to each other, that's even more powerful. Okay. It helps to understand. It gives you better appreciation. And also when you do your homework and start doing what I show here in my stream every day, when I check monthly, weekly, daily, the intraday as well. Oh, I forgot about the intraday. This is another time frame. What we do here is another time frame. It's even smaller than the daily time frame. Okay, it is even shorter time frame than this one. When these 4 coincide, that's a good opportunity. We can have a breakout or a breakout failure. And the trade is you got a breakout, go with the breakout, you got a breakout failure, fade the breakout. Let me get some water. Um, with time, you will, when you start having, 1, 2, 3, 4. Oh boy, this stream is having a real, it's lagging by a lot. Is it? No, it's not. Twitch is not lagging. At least YouTube is lagging by more. What I was saying. Oh, markets. When you have markets, markets are constantly changing. Constant change. We have a market now that's being dominated by very short-term trading. There's no presence of whatsoever of longer time frame money here. It doesn't mean there's always, but it's very small. And you will see in this market, in the current markets, for example, these trades are taking 2, 3, 4 days to develop. Boy, but I am going to be seated here watching this market for 3 days to do a trade? Hell no, right? I have to trade every day. I have to sell, I have to buy every single day. I'm not going to wait 2 days for a trade. But that's what the market is. That's how this market is. Right now. It's not always like that. It's not going to be like that forever. It changed. It constantly changed. We were talking how different this market was from the second half, from the one that we had the second half of the year last year. And that market was different from the one I had at the beginning of last year. And that market was different to the one that we have in 2020, 21. On all those markets are different to the one we are having now. That's also another reason why I don't believe in these strategies, uh, RSI, macadamia, or whatever, because markets are constantly changing. Markets are constantly changing. Now, tell me how many trades have you made now? You know, in this market right now. The also chop were high at the opening. The market is going up, going down, is going up, has gone nowhere. We have a weak reference in the lower side, we have a weak reference in the upper side. Market has gone nowhere, has done nothing so far. I am sure so many traders have been selling, buying, selling, buying, selling, buying here. And there's nothing actually. There's nothing there, right? At least not now. When you start to develop, when you start to think about scenarios, okay, it opens your mind to trades. It helps you to control your biases, right? And also helps you to take advantage of the opportunities that the market can give us. How much volume we have? This 52. We may have the same volume as yesterday. Also, another thing that happens when markets open inside previous day range is it is, chop is advertised, right? They're also having a rotational market are also high. Okay. Yesterday, the odds of rotational market increased when one time frame lower ended here. When E ended the downside trend, the odds of having a rotational market increased here. What's a rotational market? It's a market that goes to the upside, downside, upside, downside. Okay, this period did that to the market. Now, opening inside previous day range also increases the odds of having a rotational market for the day. The cause there's going to be the exception. There's one exception here. The exception is if the market at the opening just goes in the direction, gets out of the range. That's the exception. Okay. They're also having a trending day increases when that happens. But these are just odds, right? There are going to be days that you will have some opening inside the day, some chop, and then boom, the market goes to the downside, boom, the market goes to the upside. Because what we're talking here is just odds, just probabilities. It helps to think in terms of odds. If you start thinking in terms of odds for anything you do in life, just anything in your regular day, you will see that things will start to change as well. You will notice things happen in your daily life when you start thinking in terms of odds in your daily life. It's quite quickly actually that happens, and you will start noticing people's behavior when you do that. How people behaves. You become an observer, and people don't watch actually. We spend too many. We spend too much time, giving too much importance to what other people may think of us, and actually people don't care. people are thinking too much on uh, in themselves to pay attention to anything else on that's going on around them. Okay. And something talking to when you talk to all traders, when you listen to your all traders, um, this market, I guess the games always has been survived. Preserving capital is the most important thing here. Big markets are markets that have high volatility. The volatility is decreasing. Is decreasing. Um, but this has these times have been very volatile, very uncertain times. The presence of very short-term traders is high. Small traders are high. Retail traders trading is high in the market. Higher than usual, I would say, or higher than what it usually is. And that is what brings this kind of crazy behavior as well. Our job is to identify actually who is in the market, who is doing what. If we can identify, for example, that this downside movement, okay, the market is going to the downside. If there is a strong selling here, if there is a strong money here, a strong trading money here, the odds of downside continuation are high. So what I want to be is I want to be along them. I want to be part of that. However, in this case, having these highs, 1, 2, 3 highs, matching highs, and having a big break to the downside, also accompanied by news, right? Remember what we talked the news about some Fed president say something and that triggered some selling. I could be a seller also. I could be part of that movement, but I know that who is doing the selling are really not that strong, and it has good odds that that movement is going to be short-lived. So I'm going to be very careful. I'm going to place my stops very tight. I'm not going to wait to be an extended movement. I'm not going to have high expectations of a long movement. Right? It helps. That's the goal. That's one of the goals, to identify who is in the market. So, but anything can change at any given time as well. Here, for example, we got this rally here that happened. Okay, we got a breakout on this level. We have big gap coming from 200. Whoa, the next thing 100. Oh, okay, you can see something here. These are not short-term. These are not short-term trading. This is something more, a little bit bigger on the background going on here. So the direction is to the upside, fueled by somebody, or some, not somebody, fueled by the participants at bigger time frame trading here. it ends here. It ends with this movement. This is really large downside. Okay. That is also part of the game here. You will hear many people in trading in chats, in chat rooms, or on the news, that you will hear about the whales, about big money, big money this, big money that, big blocks this, big blocks that, um, and that also, that's the negative part. So when you try to identify what is happening, who is doing what, using market generated information versus trying to identify what's happening in the market using other people's voices. Yeah, using talking heads from the cable news, using newspapers, using YouTubers, using Twitch streamers like myself, right? I include myself in that group. Okay, that's why it's very important to have a market appreciation and have your own ideas. Okay. The difference in those two is, you know, having an appreciation and understanding who can be in the market, using the market generated information, using the information that market is giving you here, versus the way you can hide.
Even for the exchange to buy us out and take this, because this is
versus what could be happening here. You can find, you can have YouTube, you can have Reddit, you can have chat rooms, or a lot of things. Yeah. Rooms, it's a lot of things where you can have this information. Okay, trading chat rooms, you have energy, liquid documents, the what's going to be Russia has advantage or whatever. Using this can give you biases, negative biases. Negative not because the market is going to break, but negative because it's going to influence you in a negative way. It's going to get you out of focus. And there is a lot of things that's going on outside. When you have too much things going on outside, that can impact your trading. Just take the information the market is giving you. Don't worry about what happened before. Don't worry about what will happen tomorrow. Be focused on what's happening now. Don't forget, okay, it's very important to see, to have an understanding of what has happened. Alright? And this is the counterintuitive thing. I just say don't worry about what happened, right? But at the same time, you have to be aware of that. You have to be aware of what happened, because it has a good, it can have a, could be a relevance to what is happening now at this very moment. Notice how yesterday we have this bar, then an inside bar, now we have an inside bar. Oh god. Okay. The high is weak here. They also having low is no good, high is no good. So what do we do there? What you do then? What you do when this you have this kind of markets? I don't have anything here. I still don't see anything. I still don't see anything here in this market. The next thing on the upper side, overnight high, we got with previous day held back as well. Selling from this won't be good. My reference on the upper side, I've been focusing on this high, coming close. What the heck is this 41.52? Like it was previous day high. It doesn't matter anymore. This is the only thing that could be of relevance. But before getting over here, the market can have to take first. The market has re-entered the value area, which is overlapping to the previous day. Coming too close or taking this, the thing is, if the market takes this high, repair this level. To repair this level, we need to come somewhere up here, which in turn gets closer to this high and closer to this high. If these highs are taken, this one can be taken. I'm not saying that's going to happen. I'm saying I am just, and the imagination here plays a lot also. It has a lot to do with what could. We need to read what is called. We need to practice, ¿Cómo se dice entrenar en reassemble? We need to practice scenarios, probabilities here. What could happen in the market? We need to put our imagination to work. What could happen if this happens? Then what could happen if this happens, right? So we are always starting to think here. And but by the time we do that, we start doing this, we start playing with our imagination, we already have our homework, right? You already have these levels, what could happen here, what could be a breakout, where is the breakout, what could be a level of relevance, and stuff like that. It is not just pure imagination. We're helping, we're building our intuition here, we're honing our intuition here. Alright. Jesus. These calls here were 250 before the break. I mean, yeah, before the spike that started here at the opening. 260 actually. Right now the market is up here. They are still 260. Still 260. Volume is slightly higher than yesterday. I guess it's maybe like 2-3% lower. No higher, my bad. Lower. 3-5% lower than yesterday. Actually 7% lower than yesterday. There's nothing here, man. Nothing here. This high is. I wouldn't give. I wouldn't say that this high is good. The low is not good. Also, low is weak. Yesterday we have a day to the downside that has joined these distributions, that merged these distributions. Did not have downside continuation. The action to the downside has not been completed. They're still not sellers here. Remember, when market has this kind of weakness, the structure of the market is terrible weak. But usually it takes. I got this from Jim. Usually it takes some kind of catalytic to, event moment that turns the tide. That takes the market towards, in the direction of the enormous amount of weakness that is here, and repairs all of that weakness. But usually something external, something that is from the outside happens, and that's what brings the market. But that is what brings correction to the market. So that's why I also say, I know the structure of the market is weak. It's not enough reason to be short. No? That's not a reason to be short. This is an outside day, kind of like a big break to the downside, relative to this day only, relative to this day, because we are still inside trading range. But value is just overlapping here. Most of the trade is happening up. You can see value is here, but let me highlight value. This is value from this. Come on. This is value from this day. 70% of the trading happened in this area, and yesterday is this. Notice how it just engulfed previous Bailey area. This is just overlapping here around this level here. Nothing close to this one, to this 3 days here. It was around this level, around this range. It doesn't, by itself doesn't say nothing, because it is just one piece of information. Okay, halfback has been taken. March high is next, then POC, then the 3 white. Alright. Seems like market has picked the direction here. Okay, it is 10:15. Unless there's any questions, I will call it a modern stream. I will call it more the stream for today, and wish you guys a good rest of the morning. Upside continuation, we see market taking overnight yesterday's POC, and the ultimate and the potential destination being the 3 white. Okay, ultimate destination this, but the market will need to break out of this range. All right. Remember, yesterday was an outside day to the downside. Okay. All right. I wish you guys Good rest of the day. Stay safe. Bye bye. No problema, Luis Fernando. Tengas un buen día, viejo. Chao, chao.